following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Claremont. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Surrender and let go of the past. This is a great, I love this card. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go of the past means that you can enjoy the dream that's happening right here, right now. Oh, yeah, baby. Market-wise, let's take a look at it out here. We have the Dow Industrials down 174. Nasdaq's off 10. S&Ps are off 8. Gold contract up $9.30, trading at $13.5520. Silver up 7 cents, $16.67. Both of them, folks, price and volume, they got behind it. They got behind it in a big way. Light sweet crude broke out, man. This is pretty intense. Light sweet crude up $1.23, trading $66.68. And that also has juice behind the breakout. So good old light sweet crude's going to have to pull back underneath that in order to negate that pullback. But you have a break topside, and you get volume behind that move. Notes and bonds. You get the 10-year note up 3 ticks, 120.27. 30-year bond up 9, 146.07. They have volume behind them, but bottom line is that they need a more price spread. King dollar. King dollar down 35 ticks, trading at 89.245. King dollar coming into its strength from the 28th of March. So this baby here, we'll see whether it's going to build more cause to go after its lower swing point. But that's the way it's set up at this particular point. The euro's trading at 123.65 to 1 US dollar. The yen is at 106.86 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks, on what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? It's typical, folks. Bottom line, check it out. Yesterday, we go higher. We basically fail on price and volume. Bottom line, S&Ps go to SPY went to 266.04. You're done 105 million shares. You're going into 183 million shares. What do we do today? This is about as good as you can get. You go up to 265.64. The high yesterday was 266. You're going to even have lighter volume. Well, yesterday we did 105 million. Right now you're at 67 million. That'll be the test of the high swing point. Doesn't have the juice. Giving it up. We'll see what kind of close we get out here. We go take a look at the future market right now. This market, by the way, has hung in there all day long, big time too. Inside the future market right now, the ES minis, bottom line is that you just broke the consolidation that we've been in since 10 o'clock this morning. And you've got this break with volume. Someone just threw well, not someone. In the 10-minute chart, they threw 34,000 contracts into it. You're going into 45,000. What I do expect we're going to see is the low that was established out here this morning at 11 o'clock is going to get tested. That's 2640. Right now, you're at 2643. That gets tested. If that comes down there with volume, like we we just had. Then you get game opened into the 2638 area. So going to be interesting coming into the close. The NQs, let's take a look at the NQs. So the NQs are the first ones that went from positive rather to negative. NQs out here, also, we take a look at the NQs. What you're going to see is that the NQs got a high going out here at 12 noon at 66.63. We've already given up 60 points from that number. Now, the NQs are basically saying that, number one, the S&Ps are going to go a lot lower coming into the close. The reason I'm saying that is this. The NQs were the strongest indice when you take a look at the NASDAQ, S&Ps, and Russell. What we have here, 65.95. That's the 11 o'clock bar. We had volume out there of 12,000. Well, guess what? They just threw 9,000 as well as 7,000 into these bars. It's going to go after this bar right now. If you break that bar, the NQ will be down into this 65.86 area. Notes and bonds. This one's going to be a wild one. So the note and bond market. Right now, the 10-year note is up 3 ticks. 1.2 million shares traded. Now, that's an expansion of volume, but it needs a lot more volume than that. We need, it looks to me, we need about 1.5 million contracts. Now, your swing point only has 1 million, but bottom line is that we did 1.6 million last Friday. So that's what I'm looking for. 30-year, we take a look at the 30-year. What you have with the 30-year? 30-year right now is trading at a price point of 146.09. You've done 277,000 contracts. That needs like 375. But that's what I want to see. The swing only has 191. But bottom line, you're breaking. Well, you're coming into the February 6th level once again. That February 6th level was a huge sign of strength. Bottom line, not the end of the world, but want more volume. Gold, deviant, gold, silver, all of the above. You got to love it, man. 460,000 contracts. You hit a high out here of 1369. You gave up 14 points off of that high, but guess what, folks? You go higher, you're pushing swing points with volume, you're going higher, man. This thing is, this is a typical of the gold market. Frustration over frustration over frustration. That being said, if you get into the equities, what you're going to see inside the GDX has the juice, man. GDX is over your swing point of 2190. You get 2252 rather, 2251. You're blowing away that volume. You've already that swing point there. Well, actually, if I go the day before, it's 74 million. Right now, you've done 48. It's going to do over 74 million. Bottom line, coming into the close out here, what happens in the GDX? You get monster volume coming into that close. XAU, the HUI, XAU right now. Also launched the swing point. We're up $1.64. You're at 83.58. That's on its way up there to 86.01. The Gold Bugs Index, which has been the weakest indice out here, also caught a nice bid. You're up $5.53. Blew away the swing point from the 26th. You're running into, we're at 182. That baby is going up into the 190 mark. You stay right there, folks, because we get the #1 market timer out here in the S&P in the gold contract coming up. Our own Mr. Steve Rhodes. He is going to be teaching you tonight a great webinar, 6 o'clock. Stay tuned. Steve and I are coming right back. Dow Industrials up 224, NASDAQ up 23, S&P's up 13. We're coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now down 241, NASDAQ off 28, S&P's off 14.5. Let's go over to our man, Mr. Steve Rhodes, the #1 market timer, according to Timers Digest, in the S&P as well as gold. And guess what, folks? You can learn from Steve tonight. Well, of course, you're learning from him every single day. He's got a great program every trading day, 1 to 2 Eastern Standard Time. Great newsletter, Mastering Probability. The way you get into this workshop tonight, come over to our website at TFNN. You get the newsletter a month, money back guarantee. You're going to get in a great workshop. And that workshop, folks, the title is the 5 reasons traders and investors fail to spot a bear market. It's not that Steve is saying there's a bear market. Bottom line, he's going to give you the tools to look as to, is there a bear market? Is there a top? Is there a bottom? Is there all above? You get a great night for this, man. I'm telling you.
Well, it's really perfect for what it is I'm going to be sharing with subscribers, because the patterns are active. So it's not just taking a look at historically, but it's taking a look at where are we at now?
Yes.
What are we doing? Why are we doing it? And so forth. And, you know, what was really great for me today was my day started off, well, it didn't start off at this time, but at 9 o'clock, just past 9 o'clock, I received an email from a person that signed up for the workshop.
Okay.
And it brought me back to just less than 12 years ago when I heard Tom O'Brien on the air. And this individual went on to say, he said, just wanted to thank me for the great education. And he went on to say that he almost gave up trading, but that my show encouraged him to hang in there.
Sweet.
He said, I'll be in your class tonight. Yep. You know, if he can't be there, he's going to go ahead and catch the archive. And really, Tom, that is what it's all about.
It's empowering. Yeah, I'm not just that for you, for everyone. Right.
Yes.
No doubt. Right.
You know, and it brought me back.
Because it's their money. It's, you know, you trade with your own bread, but yeah, big time.
And the ability, you know, so when I say it takes me back to 12 years ago, you know, just hearing you on the air, and then I went ahead and at that stage I was searching for answers. So really, this message right now that where I'm on during your show, I'm really speaking to those folks that are searching for some answers, that have an interest in expanding their technical education. And it's perfect, as you said, this is a perfect time to be exploring the 5 patterns that precede every bear market, because it can be used not just to identify bear markets, but it can be used for intraday trading. It can be used for different time frames, different instruments. And so this is just like where I knew after hearing you that, yes, I wanted to go expand my education. I wanted to grow out there. I wanted to then be able to contribute to friends and family, my kids and so forth, and be able to teach them something. I just knew that that's what I wanted to do. And that's what our workshops here at TFNN, yes, the radio shows each day, the workshops a bit more a bit more focused on something very specific. And that's what we'll be doing tonight. It's very specific. And so I'm just looking for one more person. I would just like that. So that person that's either driving their car, listening in, what have you, I'm speaking to you if you are the individual like I was 12 years ago in listening to Tom about wanting to be able to expand your knowledge. And if you've never been a subscriber to Mastering Probability, then this is the absolute best time to sign up for the course, even if you can't be there, because you've got a 30-day unconditional money-back guarantee, as you say, and you're going to get an education, not just the workshop tonight, where I'm going to show the exact 5 patterns that you'll be able to use. But you've also, as soon as you sign up, you're going to get access to 2 other workshops.
Yeah, this is a big deal, right?
Yeah, so it's a huge value there. But really, Tim, who was the individual who wrote me this message, to me, that's what it's all about. If I can find one person where I can change their life, because you found a person, you changed my life. There's no doubt about it.
Appreciate it.
I had the drive to not just want to learn what you were teaching, but I wanted to be you.
I'll tell you, folks,
right?
I remember this Master Trader series so well. Steve didn't sit down. He stood up, and then he said to me, I said, well, how long have you been listening? He says, well, I only found you like last Friday. And I looked at him, I said,
exactly.
What?
Hey,
hey, listen, it's a quick 12 years. That's awesome, man.
It is a quick 12 years. And that's another important thing, right? I mean, it goes by just like that. So,
it does.
So this is great. So that's, so this spot here, I don't want to take up all of your time because there's plenty to cover inside the markets, but
well,
it's,
inside, can we just let's go through what else they get here, though. I mean, inside this workshop tonight, because this is they're getting a huge amount.
Well, they are. First, the money management aspect of being able to trade, invest. That's all about position sizing.
Yes.
And just that lesson alone is worth everything, because this is like Tim experienced. This is where traders or investors get into trouble, is when they're simply over leveraged. And then money is the most difficult thing. And when you're in a trade, it's the most difficult thing to deal with when you're in a losing trade, right? What do you do? So it's a very structured position sizing process that will go ahead and be able to hold on to your capital, at least the way that I teach it out there. So they have that. They're going to have the 5 patterns that they're going to be used so that they can spot the next bear market. Because look, the bear markets over the last 5 years are averaging, I think it's just around 50%. And when you get a bear market like that, for the portion of your portfolio that's in equities, you need an 80-90% return just to get back to scratch, just to get back to break even.
Yes.
And I don't want people to do that. So I show the exact step-by-step process, as we say. So you've got that. You've got another tool that I use on the radio show, and I use it for trading all the time, which is called the oscillator unchanged line. I like to refer to it as Stevie's red line out there. So they're going to have, and that integrates into tonight's workshop as well. And then for those folks that are longtime listeners out here, they're going to get a workshop that deals with, as taught to us originally by Bud Rolfs with regard to his primary trading ranges. I have termed it slightly different, horizontal trading ranges, because it's just done with a slight nuance to what Bud had taught us. So they're going to get a workshop on that. So the value, plus you've got 30 days worth of education, trade setups inside the newsletter out there, access to me. Send me an email. Like I have a subscriber. I get emails from subscribers all the time asking me, hey, what do I think about this? And so it's a specific issue that they're taking a look at. Might be a stock, might be an ETF, and I get back to them in short order, and that way it really assists them with what their next move should be, or that they can at least consider out there. So it's all about being able to, look, the reality in life is you can't touch someone unless you've been touched. And you touched me a long time ago. And that was able to take me to elevate my game to where the way that the folks over at Timer Digest track the S&P, gold, and bonds, was able to elevate myself to get that #1 slot out there.
Yeah, huge accomplishment, man. Seriously.
Yeah, but it started that accomplishment started 12 years ago. You know, if I didn't take that massive action, if I didn't turn that mirror into a window and jump right through it and drive over to Clearwater and sit with you for a weekend and a few others out there, it wouldn't have happened. So, you know, it's all about, I always like to say that everything in life happens for us, not to us. And so I'm just looking for that one person, that two people out there that want to, that now are listening into you and I and say, you know, this is happening for them. So it's going to be a great workshop. And, Tom, I just can't thank you enough for just the opportunity to be able to go out there and maybe touch someone's life tonight.
Thank you, brother. Listen, folks, just come over to our website at TFNN. You can see it right on the top of the carousel. And sign up right now. Hour and a half from now, you're going to get a great education. Life-changing, folks. Steve, you have a great one, safe one. We look forward to the workshop, hour and a half.
Thank you.
Stay right there, folks. We're coming right back. Dow's down 216, Nasdaq's up 25, S&P's are down 12. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timer Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now down 212. You get the Nasdaq off 27. S&Ps are down 11. Let's go over to those S&Ps and take a look at them, because when you see what we just came into, it's going to get an intriguing close out here. So when we started the program, you know, we're looking at the 2 different areas where we basically came up from this morning. What we did do is this, okay? So the high volume spike that we had at 2 o'clock, bottom line, that blew that away right when we were talking with Steve, and blew it away with volume. We had 41,000 contracts versus 29. Now, this is what we just went into. What stopped this on its tracks is pretty cool. It's the opening bar at 9:30. So 73,000 contracts there. We came into that with 41,000. Now the bottom line, I'll bring this a little bit closer so you can see how this shakes out. Now what you'll be doing is you're going to be building cars. So two different things that end up happening here. You have a high volume spike at, right when I was just talking to Steve, at 10 past 3. Then what you have is that you get a little counter trend bounce happening now. Now the first part of this bounce had light volume. We're in the second bar right now, meaning we're 1 minute into it. If this bar has light volume, it does two different things. It sets up a run to the low once again, and we'll see if it can get more than the 78,000 contracts into the market, because the bottom of that is 2638, and what we just did is that we got just down to, it's a mind-blowing when this happens, 2638.75. That's exactly what we hit. We hit the bottom of that, rejected it. It did have lighter volume. Now the bottom line is that the cause building is going to happen. NQs. What do we do with the NQs? We take a look at the NQs, and if you remember, we felt that we were going down there because the NQs had already broken that level from this morning, and it broke it, and it broke it with volume. What the NQs did, it blew that away with 13,000 contracts versus 6,800. Now, this is what we have with the NQs. NQs right now are laying out at 65.96. Well, what happened is that's 26,000 contracts. We just come into that with 13. So it's the same bar you're dealing with as to is this going to break down? And in the NQs case, this is what's going on in the NQs, which is kind of intriguing. We got to 65.86. The number is 65.8650. So the NQs, as well as the S&Ps, got right to the bottom of that bar, and right at the bottom of that bar, you have a buyer right there. And most times what happens is that that's the same buyer inside the futures market that was the buyer at the open, one of the big dogs out here. Bottom line, this is where the fight is setting up, and I suspect it's going to set up pretty good coming into the close. If we do take a look at the dailies on this, what you're going to see is that the Qs also, if they close right here, it's a failure on price and failure on volume. Yesterday you did 48 million. We're at 36 right now. Got to a slightly higher high. Can't handle price. We hit 162, and the volume characteristic out here, folks, is 68 million that it's going into, and thus far we've done 36 million. So bottom line, you can expect that the bulls and bears are going to be fighting like crazy coming into this close. Facebook, bottom line, Zuckerberg's done. Guess what? Didn't do a thing to the stock. Stock went from $156 when he started off out here. It's at $167.89. That being said, guess what? It doesn't mean a thing. Why? Because we've already come down from $195. You have a high volume low laying out at $149. What it does show, bottom line though, when he was in front of the Senate as well as Congress, bottom line, he had a good rap going, and you get a counter trend bounce. You're coming into the lows of the first downdraft. That number is 167.18. Some of the other higher volume stocks out here today, let's take a look at them. We have Facebook is the highest volume stock, up 268. You get Micron Tech up 10 cents. Advanced Micro is down 13. You get Microsoft off $1. We have, let's see, Intel down 13 cents. Let's go take a look at NVIDIA, NVDA, some of these chip stocks. Chip stocks, bring them up and bring them down. Nothing much. Sideways movement on NVIDIA. You're down $1.60. Let's go take a look at Google, a couple of the other FANG stocks. Google's going sideways, down $8. That's sideways. That baby wants to jump that creek, man. Pretty intense. Google, Amazon. Let's go see what Amazon's doing out here. Same deal, down $5. Now that's you know, try to get to a higher high. No juice behind the move. These high volume lows want to be whacked. 1265. That's a big number. Let's go to Exxon. Oh, here. Let's go to the oil market. So this is a monster move, folks. Oil is up 1.8%. You're trading at 66.70. You've done 907,000 contracts. So check this out. This has been a long consolidation, and you know, when you take a look at this, man, this is a valid break. It's a break of the highs, $66.02 as well as $66.55. And you not only broke it, what you've done is this, is that you're getting away from that area. Now, if I go put this on a continuous contract, let's see how this sets up. So, we'll put it on a continuous contract. Okay, so, oh, look at this. This is interesting. This is pretty intense. And what it is this. When we came down in 2014, June of 2014, oil was at $107. By December, oil was at 52. Now, what happens, folks, is that when you come down hard, after you build a base, you can, if you break topside, you can go up just as fast, because what happens, it's all about supply and demand. Well, when you come down this hard, because there's not a floor, you don't have the supply because of the fact that we came down so hard. So your next, basically, area in this contract, like, is sick. You're talking about $107. This is major. This is a major deal, man. This is like intense. You know, so that would be the ultimate. If we go to the lows of the highs, no, the lows of the top of the consolidation, you're still talking $75, and that would get you to the lows of 2010. Now, what's intriguing about this, in 2010 and 2012, what's intriguing about this is that if you take a look at the good old King Dollar, right? So this is going to be wild how this shakes out. King Dollar is just the opposite, meaning that what King Dollar's been trying to do is make it through the highs of 2008, 2010. And it's been basically hanging up here for quite some time. So we'll see how this shakes out, meaning is oil going topside because of the Middle East? And very well could be, because you had the Saudis basically out here today. Let's see, they were blowing some let's see, well, let me see if I can pull this up. I'll pull it up on the first, the next break. But the bottom line is that the Saudis were shooting down a few missiles out here today. Dow Industrials right now down 181, NASDAQ off 17, S&P's down 9. Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Dow right now is down 186. The Nasdaq's off 15. S&Ps are off 9.5. So bottom line is that you don't want to be sitting in the Middle East right now, folks. So in Saudi Arabia, which bottom line is that this is pretty intense too. They said they intercepted a ballistic missile over Riyadh. Now, this was in the morning our time, folks, when Trump was tweeting out that get ready Russia, get ready Syria. Bottom line, that's nighttime over there. A couple hours after that, so about 8 o'clock morning our time. Bottom line, they shot down they intercepted one ballistic missile over Riyadh, and they shot down 2 drones in another part of the country. They're saying that the Yemen rebels... bottom line, those are the ones, they've been in a 3-year conflict with them, and that's who they're claiming that's who is sending that off. More than likely that is. Loud blasts were heard in the night sky above Riyadh on Wednesday. Bottom line is that the missiles were fired 2 hours after Trump confirmed the U.S. would strike Syrian president. My God, I'm telling you, man. You get stuff happening all over the place, and we're lucky we're not sitting in any of those places. Oil. So let's go to the XOM first. So you got oil with the major breakout topside. Yesterday you did have ExxonMobil as well as Chevron come off the lows. Not bad volume. Bottom line, you have to prove a lot more than this. You know, Exxon's down from 89. You're at 77. You're coming into a volume of 36 million, you only get 11. So Chevron right now, Exxon rather, is saying that it's not going to be able to handle the price. Exxon's not going to be handling the price. Chevron, same type of setup, actually. You're coming into 13 million, you get 4 million. The XLE, we take a look at the XLE. XLE, the XLE is not bad looking. Okay, so the XLE, yeah, this overtook its consolidation. The XLE is saying it does want higher price. So 69.90, 64. That's saying that $5, 74 is game. So yeah, the XLE is saying that 74 is game. That's a decent number in the XLE. There's no doubt about that. The financials, the XLF, whole different ball game, folks. That can't handle price. And what we are going to have happen here, of course, is that you have the J.P. Morgan coming out with numbers, kicking off the financials on Friday morning at 7 o'clock in the morning. So this is going to be intriguing, seeing how this is shaken out. The XLF right now, down 30 cents, really sideways move, $27.42. The low of the February 5th, the first big downdraft, with 20 cents below that. That's always dangerous. You're in a different trading range. This does have a high volume low at 26.76. And what I expect you're going to see, bottom line, is that that little baby wants to be tested. So we'll see how this shakes out. Let's go to J.P. Morgan, who is kicking off the financials on Friday morning. This is down $1.64. Now, this is actually down in late volume today. So this is saying that this still wants to pop higher. It's still in tough shape, but that is saying it does want to pop higher. Let's go take a look at Goldman. Goldman has been moving around quite a bit. Goldman Sachs right now today is down to $3.46. That's down with volume. So Goldman is saying it wants to go after the 241, and right now you're at 253. And what we do want to do with Goldman, I believe, let me just do this again on the monthly, because this is where I believe last month it closed at 251.86. Yeah, that's okay. So the number we've been keeping an eye on Goldman for a long time is 250.70. 257 was the high of 2007. We had volume of 227 million. We had taken that out, and we took it out. We took it out with dramatically lighter volume, like 90 million. It's been hanging up here for 4 months. Because if we get underneath that at the close, well, the Goldman saved itself at the end of March. It closed $1.86 above the high. Listen, as long as you close above it, you close above it. That's all that matters. The lows coming out this month thus far has been 243. So we'll see where that shakes out at the end of the month. But that Goldman itself has been teasing to go downtown. And if that breaks downtown under that 250 level, that would be a major failure on price, failure on volume. And not only that, what you do have there is that a failure on price and a failure on volume as to the aspect of after consolidating at highs on dramatically lighter volume. Let's go take a look at the GDX, and we know the GDX is going to send some big volume into the close, and we already got some good volume. 52 million shares, taking out the swing point of 44 million. You're coming into the high volume benchmark from the 14th of February, which is $23.15. This is a nice setup. You know, we have 95 million at that level. Now, I don't expect we're going to hit the 23.15 today, but what you do have out here is that they'll throw 25 million into the close, into the GDX out here today. Small caps. Let's go into the small caps. Look at the IWM. IWM right now is up 36 cents, and we are at 153.77. And if a guy can stay up there, that's bottom line saying that's it's going to want higher price. Now, what's intriguing about the small caps here is that what you do have here is that you have a lot of the commodity stocks inside the small caps. So oil, mining stocks, all of the above. So this is going to be interesting watching how this shakes out also in the next few days. We go take a look at, let's go take a look at Walmart. Walmart's been trying to compete with Amazon. Bottom line, no action. Walmart, right now, we've gone from a price point of 110 bucks down to 86. And the way this is trading, did it get back inside the range? Yeah, it got back inside the lower range. This is setting up that it wants to get down to $77.50. Now, what Walmart has done is this. Walmart has also come off its highs with volume. You made a high in November, 169 million. You come off the high with 307 million. You come off the high with 256. Those are on the monthly basis. That, folks, is a huge problem. Most times when you come off a high with volume, the correction is larger than a normal correction. That's technically. Fundamentally, what you have there is that that's large funds that are selling. They're not buying back on a retracement, and then they're losing sponsorship for the equity. That's what you want to wrap your head around in a large way. Dow Industrials right now down 219, Nasdaq's off 26, S&Ps are off 13.5, and what you're going to see out here as we come into the next 10 minutes to 24 minutes inside the S&Ps is that we had the first test down at the opening bar And what we did is this. This was anemic volume on the way up. 18,000 contracts on the way up. It's going to go after this swing low again. Bottom line, we'll see whether it's going to be break into the opening bar, which is 26.38. And right now you're at 26.42. Stay right there, folks. We'll be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is off 218. Nasdaq's off 27. S&Ps are off 13. Percentage-wise, you get 0.9% in the Dow. S&Ps are off 0.4. Nasdaq is off 0.3. If we go take a look at that composite, folks, composite out here got to a price point today of 71.28. That got over the highs of the last 7 trading days, and guess what? Gave it up. If we go over and take a look at the volume, what you're going to see inside the volume characteristic is that we did we have done 1.5 right now. They'll throw another couple hundred million. They'll throw like 400 or 500 million into that at the close. That being said, that's still a major failure on price, on volume, because what you're going to see, if we take a look at this composite, what you're going to see is that you got over everything going, let's see, 71.20, yeah, we did it. Everything going all the way back to the downdraft of the 27th of March, okay? So we've made it over those levels. You're going to have dramatically lighter volume. Bottom line, you're closing the lows. What does that mean? Bottom line is that you have the S&P is still on an ABC structure on the way down. Your NASDAQ is on an NDX 100 is on an ABC structure on the way down. The SMHs are still in an ABC structure on the way down. Bottom line, trouble in paradise all over the place. In fact, the SMHs couldn't even make it a complex one, whereas the NDX 100 made it a complex one twice. No, once rather. Once. No, 1 second. Hold on. I think this was twice. Let me see this thing. 1, 2. Yeah. The NDX has made it twice, which is very unusual, by the way. Bottom line is that you normally don't get something like that. You don't have to break the B point the second time on a complex ABC structure on the way down, nor on the way up, folks. As long as the definition would be that as if it's an ABC structure on the way down, as you're passing the B point, you'd be passing with lighter volume, you give it up again. If it's ABC structure on the way up, you'd be passing the B point. In that case, you'd be passing it with volume on the way up. Stay right there, folks. Coming back with lots of numbers after the close. Dow Industrials down 232, NASDAQ up down 31, S&P's off 14.5. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. Accept others the way they are. You cannot change other people. To try to change them to fit what you want them to be is like trying to change a dog into a cat into a horse. They are what they are, and you are what you are. Market-wise, let's take a look at it out here. We had the Dow Industrials down 218. NASDAQ off 25, S&P's off 13. Gold contract trading up $9.80 at $13.5570. Silver up 6 cents, $16.66 an ounce. Light sweet crude, big hit. Top side, up 124, $66.67. That's a break top side, folks, and it did have the volume behind it. Bottom line, we're going to be talking some big energy prices out here. Notes and bonds, you had the 10-year note up 4 ticks, 120.29. 30-year bond up 13, 146.11. They both went higher. They need a little bit more volume to really break topside in a big way. King dollar down 15 ticks, trading at 89.265. The euro is trading at 123.62 to 1 US dollar. The yen is trading at 106.85 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have out here? Okay, so you get a major failure on price, on volume. The SPY got to a price point today of 265.64, getting right into all the highs from the consolidation that we've been in since March 22nd. Gave it up in spades. 83 million shares going into 148 million shares. Now, this is pretty intense, too. Well, watch this. This is pretty wild. The Dow Industrials, same type of setup. The Dow Industrials, folks, only did 727 million shares. That is anemic volume. As it tried to get higher, couldn't handle it. NDX 100, same type of setup inside the NDX 100. What we have with the NDX 100 is that you got to a price point today of $162. We closed at 160. You're going into 80 million shares, and you did 40 million. The composite, now this is pretty intense because there's no buyers out here, folks. This is pretty intense. We haven't seen the volume contract like this in the composite for 90 days. And this is what it is. We did 1.8 million shares. The composite loves doing 2 billion, 1.8 billion rather. The composite loves doing 2 billion, 2.2 billion, 2.4 billion. Bottom line, what the composite also did goes into all the highs that were generated out here since the downdraft of the 23rd, gave it up on price, gave it up on volume in an incredible way, actually. So it's a monster heads up that this market wants lower price. Gold contract, what do we have with gold? Gold goes just the opposite way. Gold gets a big bid. We do 467,000 contracts. There's buyers in the gold market. We got to a price point of $13.69. The swing point that's going after is $13.75.50. I expect, number one, you're going to be right back topside because what we did do is this. You closed out at $13.55. You got to $13.69, gave 14 points off the side. Guess what? You are pushing into swing points with volume. That is going to be tested once again. I expect you're going to get up and over it. And the reason I expect you're going to get up and over it is if we do go into the GDX, you're going to see the equities held price in a big way, had volume, had spread, had it all. We did 72 million shares, taking out the swing point of 44 million, taking out the swing point of 74 million the prior day. So we got the action inside the GDX. If we go to the silver market, we take a look at physical silver. What you're going to see with physical silver, caught the bid, caught the volume. Bottom line, silver got to a price point of $16.89. It did 132,000 contracts. Bottom line, that's saying that, guess what? Gave it up on price coming into the close, last 2 hours actually. Gave up 20 cents. Has the volume going into the swings. I expect you're going to be right back topside. Deviant move, no two ways about it. Deviant moves and those metals continue. King dollar. Now, King dollar, this is where you're shaking out with King dollar. King dollar came down today, 18,000 contracts. Now, that is light volume on the way down, particularly because you're coming into the strength from the 28th. That being said, what you have with King dollar, you get a little tiny doji. Most times what you see with those are the middle of the move on the way down, which would set up that King dollar wants to go after this 87,830 mark. And that 87,830 mark, folks, is the low that was established out here on the 16th of February. What we have had with King dollar's been in a it's been in a low-end consolidation since the 24th of January. Some of the higher volume stocks out here today in this low volume market, we had Bank of America down 58 cents. You had Micron Tech flat. Microsoft was off a buck. If we go inside the Dow Industrials, the strength versus the weakness out here, the mover on the way down, as usual, Boeing put 51 negative points. United Health put 33. Goldman put 24. If we take a look at the NDX 100, the strength inside the NDX Netflix. Netflix was up 1.8%. You had Marriott up 1.6%. JB Hunt was up 1.4%, and Hasbro was up 1.4%. Taken away from it on the way down, Fastenal. That was down fast and furious. 6% down. You had American Airlines off 4.3%. Ultra Salon was down 3.5%. Big numbers, no two ways about that when you're taking a look at that. If we go over to the TLT, the 20-year bond ETF, TLT, up 43 cents. You're going into the swing point of 122.35. You did 5.7 million shares out here. It's going to need more volume as goes in there. But guess what, folks? The way this is setting up right now, how you're pushing into these swing points inside the 10-year note, inside the 30-year bond, inside the TLT, what the market is saying is that people want basically safety, and they want to make sure they're going to get their money back versus the not getting their money back versus the volatility that this market has been pushing out for some time right now. If we do go over to that oil market, we take a look at oil, you're going to see this oil market, that was a major break topside. This oil market out here right now, we went up 1.9%. You did 919,000 contracts, and you took out the consolidation that we've been in since the 25th of January. Stay right there, folks. We got our man, Mr. Chris Gaffney, the president of Everbank World Markets, coming right up.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish down 218, NASDAQ off 25, S&P's off 14.5. Let's go over to our man, Mr. Chris Gaffney, the president of Everbank World Markets. You've heard Chris on this program many times, folks. You know, Everbank, they have many great products. One of the products that they have, we talk about quite a bit, are the market-safe CDs. Now, you know, volatility in the marketplace, guess what? We haven't had it in a long period of time. This volatility has been vicious in the last few months. And we're going to talk to our man, Mr. Chris Gaffney, about how you can fuel up your portfolio. And what we're talking about specifically is this is a one-time offer. And we're going to be talking about Everbank product that created a 3-year Petro currency market-safe CD. Chris Gaffney, welcome back to TFNN.
Thanks, Tom. Appreciate you having me on. And the second part of that name, market safe, the safe part is what's important right now for investors, especially in these volatile markets.
You know, it's amazing. I mean, you know, we've all been in these markets for a long period of time. I've seen plenty of volatility, including 2007, 2008, you know, all of the above. This market is amazing. We can go up and down 40 S&P points in a second. It's like, I don't care how experienced you are. You know, I hear on the air all the time that they say, traders love this. Well, guess what? Folks, I wouldn't agree with that. I like volatile markets, but when you can go 40 points up and down, guess what? You know,
it is back.
It is. And so... Let's talk about how this Petro currency market-safe CD works, Chris.
So what we did is, you know, we, as you suggested, we created these CDs a number of years back and have had a series of them. This one is tied to 4 different currencies that are currencies of countries that are oil-rich, that produce petrol.
Yes.
And that's why, you know, we call it the petrol currency CD. The way the CD is going to work is that we're going to measure those 4 currencies on the first pricing date. We're going to compare the price after 3 years to the original price.
Okay.
Whatever the average, they're equally weighted, so whatever the average price gain on those currencies during that 3-year period, we're going to multiply that by 2, and that's going to be your upside payment on this CD. If those currencies fall during the 3 years, we're going to give you your principal back. So there's no risk to your principal on this CD. So it's all upside, no risk to your principal. And again, the upside has a leverage factor of 2, so 200% leverage. So whatever that return is, we multiply it by 2, and that's what we pay out.
And, you know, when we go through this, folks, okay, we had oil break topside today. Now, when you go through this, and the way to do this, folks, is go to everbank.com/TFNN, so you're going to see how this works. And you've made it clear here that, you know, it actually doesn't have anything to do with the price of oil, but yet it has to do with these countries because these are big oil-rich countries, and I would say fundamentally that, listen, if oil is higher, these currencies could look pretty good.
They should, and yeah, those 4 countries are the 4 largest non-OPEC producers of oil, with the exception of we took out China and the U.S., which are also the largest consumers of oil. So these 4 countries, that's how we determine these 4 countries.
Yes.
And yeah, if you know, they're one of their main exports is oil, and so if oil does well, if the price of oil rises, these countries' economic performance should improve, and their currency should do well. So
sure.
You know, their currencies can be volatile. Some of these are really volatile. If you look at the Russian ruble here lately, it's one of the most volatile currencies we deal in. Brazil has been volatile, has a history of being volatile, and Mexico on the upside last year, but you know, it's pretty volatile. So their currencies can become very volatile, but that's why it's nice to have them in this type of package where your principal is protected over the 3-year period. So no matter what, no matter how volatile these currencies are over that 3-year period, your principal is protected.
Yes. Now, let's talk about, you know, what ends up happening, folks. You can open this account with only $1,500. Bottom line, you can put 100 grand in too. You know, we're in a market right now that I would say you just want to make sure you get your money back, okay? We've had a market that's gone up for 7 years. So the bottom line is that protecting what you have is a big deal.
Protection of principal, and that's what makes them a good investment choice for IRAs also.
Yes.
Because, with the low minimum, $1,500, you know, you can do your IRA contribution into a new IRA that you set up here and put it right into the market safe. It is, you know, protection of principal. So it's a real nice product for IRAs. And again, I think, you know, the idea here is either the currencies are going to do well and you're going to get that leverage and do really well on the CD, or if they drop, you're going to get your principal back. And so there's really no risk to your principal and a good way to play volatile markets.
Now, when we're talking Everbank, this particular product also is FDIC insured.
Right.
So, so I put $100,000 in, right? You're an FDIC insured, you know, bank basically. That's pretty cool. You're not guaranteed you're going to make any money, but you are. The FDIC is ensuring that, hey, listen, my money is in good shape, right?
You're going to get your principal no matter what happens.
Right.
So you're going to get that invested principal back. And while they're out there on the website, everbank.com/TFNN, they can also look at some of our high-yield checking accounts, money market accounts. We've got a full variety of accounts, including currencies, precious metals, and of course our high-yield checking and money market accounts.
So hey, this is a great. Let's talk about the checking account, because what happens, folks, is this: is that once you open the account at Everbank, they have a lot of great products that, you know, bottom line, you know, most times we don't have a chance to talk about. So let's start there, because you know, once they're set up, I mean, now you have a whole different aspect of what the bank offers. So how do these checking accounts work, Chris?
Yeah, and you've got access to both the checking and money market. And
yes,
we have something called a yield pledge. So we will keep the yield on those accounts among the top 5%. So we pledge to keep the yield among the top of all of our competitors. And initially, for the first year, our checking account carries a 1.21% APY for the first year. Our money market is 1.5% APY for the first year. So both of those are great. And that checking account, that's 1.21% on a full-service a checking account that, you know, you can do ATM withdrawals.
That's amazing.
Service checking account, and yeah, it's substantially higher than what you'll see on the average checking account.
And you know what is amazing too is that I think for all of us, you know, we know that the Fed's been going up on short-term rates, but yet, you know, guess what? It, like the notes and bonds. Bottom line is, it looked like they hit a low in February, and thus far, people are still buying notes and bonds, and these interest rates have still stayed tremendously low, right? So when you're talking about a checking account with any type of interest, it's great.
And we got the Fed minutes today. I know, you know, that may have had a little bit of an impact in the markets. They certainly sound like they're going to continue to raise rates, but it's not a quick pace. You know, they're going to pause again probably. We may see another quarter in June, but then we're starting to read about more worries about, you know, tariffs, trade war, that sort of thing that may, you know, stem from accelerating the rate path. So
yes.
Rates are still going to be low, even though they raise them.
Folks, Everbank's number is 855-750-4051. Give them a call or go to everbank.com/TFNN. Chris, have a great one, safe one. Thanks so much. Look forward to having you again.
Thanks, Tom.
Stay right there, folks. Coming right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Remember, the website, folks, you just go to everbank.com/TFNN for that great product from Everbank World Markets. We're going to take a look at, let's see, Bed Bath & Beyond. I believe they just come out with numbers. Bed Bath & Beyond closed at $21.50. That is trading right now at $18.90, so that's taken quite a hit. That's down to $3 right now, 15%. Let's see what they have to say. So 18. First, let me see what we have happening here. Okay, oh man, this is in trouble. Okay, oh, look at this. It's going to be a monster ABC down. Whoa, baby. Oh, look out. Holy cow. 1 second here. Let's see what we got. Okay, first, let's see what they're going to say. Okay. Okay, so you had, we're talking about the fourth quarter here. The sales, comp sales of the store, the estimate was minus 2.3%. They came in better. They kind of came in 0.6%. Their estimate had been $1.39. They came in with $1.41. So that looks cool too. Their estimate for net sales was $3.68 billion. They came in at $3.7 billion. That looks great too. Bottom line, folks, there's something wrong here because this market is selling this off. They're not believing a word that these numbers are saying right here. So let's see what else is in here. Excluding the net unfavorable impact from the Tax Act, net earnings per diluted share in the fourth quarter would have been $1.48. You know what's amazing is that, you know, the market in general, all these companies in general, basically, the theory was that they would basically do better because of the tax, new tax deal. And accounting-wise, they're getting smoked because of the fact that they had so many credits on their balance sheet, and those credits are worth a lot less money now, and that's what that is. when I'm reading that excluding the net unfavorable impact from the Tax Act. What that is that they've had so many losses for so long a period of time. Bottom line, it takes it out. Oh, I see what's going on here. So the quarterly dividend. No, they increased their quarterly dividend to 16 cents per share from 15. The estimate had been 16. So the market was looking for more money in the quarterly share. But when you take a look at this, let me say this. Yeah, this is in trouble, man. This is in big trouble. So your swing low is $19.07. You're trading, this said $18. Yeah, you're trading $18.65. This is going to blow away this swing point. And it's a large ABC structure on the way down. You're talking, the most conservative way to do it would be 28 is your 8 point, September of 2017. 19 to B, you're talking about $9. Your C point is 24, so you're talking about $15. And right now you're at 18.50. Closed today at 24. Let's go see where 18.50 is. Oh man, this is a trouble. So check this out. What a swing, folks. Okay, this might be one of the first ones we've seen come the whole way, and now this is danger in a big way. 2008 lows, $16. The highs of the lows, and this is a high volume low, by the way, okay, wants to be tested. The high of the low is $25. You can see when you get into that, bottom line's trouble. So what does this do? This equity in 2008 was $16. It gets all the way up to $80 in 2014. Now, if you want to see something, first you make the high with 29 million shares. You come off the high with 83 million. This is volume off a high, and I just want to show you how dangerous volume off a high can be. So watch what happens. We go from 80 to 63, monster volume, 83 million. Watch this. You make it, now that's January of 2014. It bottoms out in June of 2014 and then makes it all the way back up to the high. Now watch this. You get June, you go back up and try to test the high in January of 2015, so a year later. Your characteristic is 71 million shares going against 83, gave it up again, and never looked back. This is a monster problem, man. And this is going to be, that's pretty intense that you have an equity that is making it all the way back to the lows of 2008. How we hit that low is going to be crucial if, in fact, I'm going to bring this back even further. If these guys, they got a long way to go. It's in no man's land right now. You know, this thing can actually get down to $11. So it looks like it's going to go. Yeah, $11. That's 2000 and that's 2000. My God, that's 2000. Trouble in paradise for good Bed Bath & Beyond. You know, we know the trouble that the internet, I mean, has given many of these retailers. And if you've been in a Bed Bath & Beyond, you know, great store, monster store though, and you got to put your head wrapped around as to how much rent, electricity, taxes has to be paid when you have something that is a huge store on a continual basis. 7 days a week, 24 hours a day, bottom line, whole different ball game when you're selling, you know, things that most of us know what kind of towels you want, what kind of stuff you want in the kitchen. You know, there's not a lot of differential inside a store like that. So let's go take a look at some of the let's go over to Amazon first. So Amazon right now, that is trading. That failed on price, failed on volume out here. What that baby did out here today is that it got into, tried to get into a high, gave it up in spades, 3.5 million versus the downdraft out here of 13.7. So it's a big number. There's no two ways about that. we take a look at one of the big movers out here today was Netflix. Let's go to Netflix. So Netflix was a big positive out here today. You had Goldman Sachs coming out, say, doing upside potential, all of the above. Well, guess what? Goldman Sachs, they got the bid going in Netflix. It got up to $311, sold it down to $303. You're going into your downdraft of $18 million, it did $14. Now, Netflix, even since the highs of January, has been one of the best performing equities out here. So I don't expect Netflix is going to fall apart here. But what you're going to see, if you can take some of the strongest stocks out here, which Netflix is one of them, still can't handle getting to higher price. Bottom line, consolidation. This is a big heads up that the market itself still wants lower price. We go over to Apple. We take a look at Apple. Apple right now also failed on volume, failed on price, got up to 173.92. Coming into 37 million shares, did 22. Not enough juice. Stay right there, folks. Coming right back. Our phone number is 877-927-6648. Don't forget our man, Mr. Steve Rhodes, #1 market timer, S&Ps, gold, doing a workshop for you tonight, 5 o'clock. Check it out, front page of TFNN. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation, as ranked by Timers Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Gotta love that line, folks. Don't let the next bear market eat your porridge. Check out Steve. He's going to be coming up. Great workshop 15 minutes from now, folks. The way you do it, just come to right in the front page, TFNN. You're going to get a great newsletter, 30 days money-back guarantee. Great workshop tonight. Bottom line, be there. So, Fed minutes came out today. You know, we get notes and bonds that continue higher. The note market, folks, thus far, the 10-year note, that bottomed on February 15th. You know, we're dealing with April 11th right now. Pushed note and bonds, they both pushed into a swing point today. Had decent volume, not great volume, 1.3 million. That's good volume. You're really looking for about 1.5, 1.7 million contracts in the 10-year as it's breaking topside. That's what I'd like to see. What the 10-year has done, every time it's pulling back, you pull back with 1 million, you pull back with 1.1 million, we go topside with 1.3, but I'm actually looking for about 1.7, 1.5 million to break topside. Now, that being said, what we had out here today is we had the Fed minutes come out from the last meeting. And inside those minutes, okay, this is really intriguing. To me, it's even more bullish for the note and bond market. And the reason being, inside the minutes that out here that came out at 2 o'clock today from the last meeting, the Fed officials basically are leaning toward a slightly faster pace of policy tightening at this March meeting. A number of officials viewed a stronger economic outlook and greater confidence at higher inflation, implying that the appropriate path, this is their quote, the appropriate path for federal funds rate over the next few years would likely be slightly steeper than they had previously expected. Now, if we go take a look at the Fed fund futures rate, what you have is this. Your next meeting is May 2nd. Right now, the probability that we go up another 25 basis points is 72%. So that's a decent number. After that, we have a meeting in June. Yeah, this went down dramatically. So the meeting in June, you know, we were above 50% yesterday. Right now, the first, well, and that wasn't for June meeting. That was for the September meeting. Right now, that September meeting is at 43%. So what we have is this. You have the June aspect that is still at 62%. After that, I mean the May is at 72. After that, bottom line, this goes down dramatically. So you can see when you have volatility inside the marketplace, which of course we have, bottom line, people are walking and talking with their money, and their money, bottom line, is that they're buying bonds and they're buying notes. So let's go see what else they say. The minutes showed U.S. Central Bank is wrestling to match a policy in an economy that is receiving a boost from tax cuts and government spending at a time when unemployment is low and growth, by their estimate, is above its long-term speed limit. Officials worried about financial imbalances and overheating, while at the same time acknowledging benefits that could come from more people participating in the workforce. That translates into a strategy of continuing to raise rates gradually until something signals the need for a faster pace of policy tightening. Jerome Powell, at Jerome Powell's first FOMC meeting, as chairman, Fed officials lifted interest rates by a 1/4 percentage point. Here's another quote here about the tariffs. Participants did not see the steel and aluminum tariffs by themselves as likely to have a significant effect on the national economic outlook, the minute said. But a strong majority of participants viewed the prospect of retaliatory trade actions by other countries as a downside risk. The minute showed participants discussed the possibility of revising statement language at some point to acknowledge that the monetary policy would likely gradually move from an accommodative stance to being neutral or restraining factor for economic activity. Let's see. On one hand, the associated tightness in the labor market might help, this is their quote, might help speed the return of inflation to the committee's 2% goal and induce a further increase in labor force participation. On the other hand, an overheated economy could result in a significant inflation pressures or lead to financial instability. Many participants reported that their contacts had taken the previous month's turbulence in stride, although a few participants suggested that the financial developments over the intermeeting period highlighted some downside risk associated with still high valuations for equities or from market volatility more generally. They also saw the jobless rate falling to 3.6% at the end of 2019, further below their 4.5% estimate of unemployment's long-time sustainable rate. The rate for March ended up being 4.1%. That is the lowest rating that is out there since 2000. So bottom line is that when you take a look at what they said, meaning they're turning around and saying, hey, guess what? We want to go up quicker. Well, the market turned around, folks, and brought the rates down today, even after they came out with that. Now, on top of that, listen to this. This is pretty wild. So you have participants in the marketplace, notes, bonds, that's government treasuries, right? Now, we have municipal bonds. New York City. Out here today, folks, there is so much demand for bonds right now that New York City sold $914 million of tax-exempt general obligation bonds, and guess what? They got to lower the price of their yield because there was so much demand for the product. And they lowered it by 6 basis points. They had, for every dollar in bonds, they had 3.8 bids for $1. So that is a monster number. They, for the $914 million in bonds, they got orders for $2.5 billion. So the way this works, when they put that out there like this, you have a bond offering, right? You have, that's the supply. Now you get the demand. Well, the supply was only $914 million. The demand was $2.5 billion. What ends up happening? They get to lower that price of that auction, okay, until there is an equilibrium between the demand and the supply. In this particular case, you're talking about 6 basis points. 6 basis points, folks, is a very sweet number when we're talking about, and here's the coupon rates. Let's see. The yield ranged from 1.75 for bonds that mature in 2020 to 3.69 that mature in 2045. Big numbers, man. Big numbers. That's pretty intense. So you get the gist of it. The gist of it, folks, is that, yes, the Fed doesn't want to go up in rates. The market hasn't been cooperating with that, and we'll see where it shakes out. The 10-year yield right now is at 2.777. The high for the year in February 8th, I believe, 2.950. Stay right there, folks. Be coming right back. And Bed Bath & Beyond in big trouble. It's breaking a B point, has volume behind the move. Closed at 2150, trading 1871. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We had the Dow finished down 218, NASDAQ off 25, S&P's down 13.5. Now, you had each one of those indices fail on price, fail on volume. You still have the ABC structure on the way down in place on the NDX 100, the Qs, as well as the SPYs, as well as the SMHs, as well as the NASDAQ composite. The composite, this one's pretty intense, because what you have with the composite is this, is that the composite today failed, and as it failed, this is pretty amazing what we did. We only did 1.8 billion contracts. Try to get over the highs of everything from the downdraft of the 23rd of March. Bottom line, couldn't make it. So I suspect, number one, this composite still wants to go after the high volume low out there that was established on the 9th, which is 66.30. The bigger issue for the whole market happens to be the S&P, and the reason being is that the ABC structure on the way down of the S&P is a monster, folks. You're talking about 244 in the SPY. The high volume low is 252. We're 263. If we bring this back and take a look at where that brings you down to, it brings you down to where we broke topside in October of 2017. If that's what we get, it's a big problem. Why? Because what we have inside the S&P is that you hit a high with 5.1 billion shares. In the monthly, you came off that high the first month with 600 billion, the second month 600 billion. Oh my God, that's 600 billion. Yeah, 600 billion. No, 1.2 billion. No, 600 million. Sorry, 600 million. Then you did 1.3 billion shares. Okay, monster number, and that's a volume off with high. So big numbers out there. We did take a look at the FTSE, the UK, that held tight today, down $9. DAX, and that's holding tight, of course, at that February lows. DAX also under lows. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you. Go have a blast with it, folks. Look forward to speaking right back here tomorrow morning, 8 o'clock. Go get them, folks.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.